Hey, Premier Plus Realty agents, this is Jillian Young, and today we are going to talk to Edgardo Balentine of Neo Home Loans about what's happening in the market. We want to bring you some valuable information and help you get ready for 2024 and have the ability to have those smart conversations with your customers when they say, how's the market? What's going on? As well as give you some practical tips and tools and strategies to help you do your best this year. What I really like about Neo Home Loans is their goal is to help every one of their realtor partners get at least one more transaction per month. What would that mean for your business, and how can we help you get there? So with that, welcome, Ed. It's so nice to have you.
Yeah, thank you for having me. This is great.
Yeah, this is great. So I've known Ed for a really long time, and I am so proud that we are finally in affiliated business relationships. So they are the preferred lending partner for Premier Plus Realty. And so far, so good. Our agents love working with Ed and his partner, Scott, and they've had great success. I've used Neo Home Loans for my own home purchase, and it was a wonderful experience. So, Ed, let's get into it.
Let's
So
do it.
2024, we can take a look back at what happened in the market in 2023 and slice and dice it. But what are your projections for interest rates and how that would impact the housing market in the year going forward?
So, that's interesting, right? Because we came from and I think it's worth, talking about last year. So, last year we had some ideas of what was going to happen with the rates. We had some ideas because we look at the same metrics every single year to predict where we're going to end. We look at things like, will there be a recession or not? We look at things like inflation and how inflation is going to behave. And we look at things like the Fed balance sheet, because those are the three things that really move the interest rates, right? Now, last year, we were expecting the rates to drop. And I think it's worth saying that because I don't want people to go, well, they've been saying that forever and it hasn't happened. It's true, but it's because of other external factors that has been happening in the economy. Now, this year, things seem to be going more the way that they're supposed to go as far as like textbook with inflation and things like that. And the expectation is, right now we're probably sitting at a, high sixes, low sevens. We really expect the rates that by the end of the year are going to be around high five, low sixes. So we expect that, that 6% range to be where we're going to be sitting at. We started seeing a decline in rates at the beginning of the year. Now, this week in particular has not been a good week for rates, but they never move in like a straight line, right? They always move going up and going down and going up and going down. The good news is when we look at things like I'm saying, inflation and the economic indicators, and even just the Fed plot chart, which basically it's what the Fed thinks that they're going to do with the rates, not just this year, but in the years to come. The expectation is for rates to be in a decline over the next 2-3 years, which is a good thing.
So I think the question that our agents ask me a lot is, do you think that we'll ever get back to 4%?
Well, that's where it's like we're very high now, and are we gonna get back to 4%? If you ask me, yes. And I was talking to somebody that I respect a lot and that honestly understands this a lot better than I do. And what he was telling me is like, look, the way that we forecast the economy over the next 5-10 years, it's for us to have more of a 18-month cycles, 18 to 24-month cycles, where we see the rates go up to, let's say, an 8%, 8.5% even, and then go down. Funny you say 4.5 because that's the number that he used, down to 4.5. And we see that being a little bit more cyclical than what we've seen, and cyclical in the sense of we're gonna see that in a smaller window than what we've seen before. So 4.5 is definitely not something that we're expecting to happen this year or honestly next year, but it's not like that's never going to happen or anything like that. Now, below that, at 3%, at 2.5%, like we had before, that's something that I don't think that's necessarily something that necessarily should happen, even unless there's a very strong external force, which typically it's bad for the economy. So things like COVID, right? COVID hit. That's why rates went down, because the government felt like they needed to keep inflation almost at zero, and then the rates were able to go down. Things like, a big war will make that happen. So it's almost like you don't want to root for rates to go that low, because that means that everything else is it's not going so well.
Right. So a nice steady decline here in 2024 is what we can expect. And honestly, I mean, in light of where we have been in the last 18 months to 2 years, 8%, when we hit that on October 25th of 2023, I think there was a little bit of panic. We saw days on market extend a little more. We saw a bunch of price decreases in our market. So there was definitely a strong reaction to that 8%. But what I think is good to remember is that every one of our customers has a unique situation. And just because the rate's 8% doesn't mean that that's what they're going to get, right? So I think some of our agents who really work in finance transactions, which is about 50% of our transactions here at Premier, they really know that it really is an individualized approach for each customer. And so that being said, we can take a look at a higher level and say, okay, what's the 10-year treasury doing, and how does that translate into what we can expect with our home buying interest rates, or how will our other loans be affected, different consumer loans that we have, like auto, like cars, and even our credit card rates, and yada yada yada. So the overall spending of our customer. But could you talk just a little bit about that those are some of the fears in the macroeconomics, but what are some of the things that you tell customers to overcome those objections?
Well, before we get into that, I think what you're saying makes a lot of sense, and I think
Mhm.
that's the part of the conversation that we miss sometimes, right? Like, I can nerd out on rates and inflation and why the CPI core and the PCE core should go down and how inflation gets measured and all that. Cool if you're into that, but what does that really mean? And really, at the end of the day, what we want is to understand the impact that the rates, which is one portion of 100 things, one ingredient, is going to have on the actual person that's trying to buy a house, and what are
Right.
the actual market movers, not in the big sense, but what is it that happens to me to make the decision to buy a house or not. And look, rates are important, and I'm the first one to know that, because we're talking about rates and clients are asking us about rates all the time. But also, why the largest picture for this year, and the optimism of this year is not so much that the rates are going to go down, because it doesn't matter if the rates go down or not. It's that we are expecting to have more transactions, right? We're expecting
Right.
for people to start buying more houses, selling more houses, and moving,
Mhm.
right? And there's a couple of reasons why that happens. One, sure, rates are going to go down. It's a lot easier to pallet a 6% or a 6.5% than an 8%. It's a lot easier to qualify with a 6.5% than with an 8%. It's a lot easier to qualify for the house you want for that than the other. That makes sense. Same thing. It's a lot easier for me to exchange, if you will, my 3% on my house to a 6% than it is to exchange my 3% to an 8%.
Mhm.
Fine. The other thing is just the psychological understanding, and okay, this is now the new norm, right? We went very rapidly from the high twos to the 8%, like very, very quickly. It's very hard for people to now think of this as the norm.
Mhm.
Now I feel like people are more psychologically understanding of, okay, this is where rates are. If I want to buy a house, I need to be comfortable with this number. It wasn't like before, where it was like things are going up so much. How is that going to disrupt the whole market? Is that going to put some pressure on house prices and is going to make the house prices go down? Like, the movement of, like, the aggressivity of the movement was making people was making that people were afraid of jumping into the market. I feel like that's changing. And then the other thing too is we had so few transactions, especially mortgage transactions, but we had so few transactions last year overall. And the year before it was lower too, that I feel like there's all those people that have been waiting, but they had kids and now they outgrew their house, or have been waiting and they've been saving and saving and saving, but they were waiting for this magical thing to happen that hasn't happened before. There's a point where that pent up demand, it's going to break. And the tipping point we started to see with applications and with, days in the market and all that this year, where people went, okay, we've been waiting for a year and a half and things haven't changed, prices haven't fall down, rates didn't break the market, and I still have a baby and we're still living in a 2-bedroom house, like this doesn't work. Or I still need to downsize or upsize or whatever. So I feel like the translation to this rates going down, it's just that's going to give a lot of people the excuse they needed from an economic standpoint to actually move into the house they want. So that's as far as like what we see from like a group point. When we talk with clients, look, it just, like you say, is so personalized, right? Like, what is it that the person wants to achieve, and why is the reason that the rate is such a blockage, right? Because there's strategies out there. I mean, I'm a big fan of the seller buy down, right? I can ask for a $10,000 concession, $15,000 concession, slash my rate to a 5%, sometimes even a 4.5%, and have take advantage of that small rate right now. But even if there weren't options like the seller buy down, you also need to look at the alternative of where that money is going to go, right? Am I going to continue to rent? And what does that mean to rent? It's not just I'm paying my landlord. It's also there's no stability in renting, right? They can increase the rent after 1 year. They can kick me out after 1 year. It's not going to happen if I own my house. So my invitation to agents is, and this is something that we had to learn, and I feel like it's something that everybody needs to be better nowadays, is we were sitting down and the phone was ringing because buying a house was a no-brainer and everybody wanted to buy a house. Just everybody. It was just, it made sense. And in the past year and this year, we need to start explaining to people why it makes sense. But everybody wants to buy a house. Anybody that talks to you, anybody that goes into your website, anybody that's listening to this, there's something in their mind that's asking us to convince them that this is the right decision for them. And the beauty with houses in Southwest Florida is we have all the data to show you why it's a good investment, why you should buy it anyways. Even if the rate is 8%, why you still made money. Even if it's an investment, why you still cash flow positive if you buy the house. So we just need to become a little bit more educated on, hey, these are the strategies to lower that rate. But even if we don't use these strategies, this is why economically this will make sense for you and your family versus the alternative. So we just need to get better at that.
Yeah, I agree. Thank you for that. So what I heard you say was life events are going to happen and people are tired of waiting for deciding and figuring out what the market's going to do before they realize that there's this pressure of a life event. We have data on divorces or births or moving or things like that. I mean, that's going to happen with families, right? So, but Ed, for those families that are still sitting in their current rate, that we've heard a lot about rate locking really causing the squeeze on the transaction count because we have less motivated sellers. Have you experienced that, and how do you navigate out of that? Is it just a lot of what you just said about taking a look at why even paying more per month is still a good investment? You can still be cash flow positive if you hop out of that lower rate and hop into something that's a little higher.
Well, look, and yes, we've seen that a lot. I've never in my life, in my work life, have had so many approved buyers that weren't jumping on buying the house. Normally, you're approved, you qualify, you're putting offers every weekend.
Mm-hmm.
last year, the year before, it was okay, you approve, you qualify, and you just sit on that approval because the numbers don't fit, the house is not, the payment that you had in mind for you to change a $2,000 a month payment to a $6,000 a month payment, which is 3 times as much. You're not getting 3 times as much of a house anymore because the rates were up and all those things.
Mm-hmm.
I get it. I mean, we've gone through that in my personal life. I understand that. So I think the conversation with that, or with everybody, is twofold. It's one, what are the alternatives? Okay, like
Mm-hmm.
realistically, you're sitting on a house, and the reason you need to move is because you have outgrown the house. So your alternative is to rent another place or stay in the house and be in a house that you're uncomfortable with,
Mm-hmm.
right? So just, you need to be like, I feel like when people talk about housing and people talk about their decision to buy or not or rent, they stop a step too short, right? They go, well, I want to buy a house because I need a fourth bedroom because we can't continue to live like this. Okay, I'm approved to buy a house, but then those houses have a payment that I'm uncomfortable with. Therefore, I'm going to wait. But the conversation doesn't continue to go, okay, wait for what? And
Mm-hmm.
is that realistic, right? Wait for the prices to go down. Will the prices go down? And what are we looking at in the economy that's telling me that prices are going down? Because then we can have that conversation, right? If your answer is, I'm going to wait for prices to go down, then let's talk about it. Let's talk about house formations versus house completions and why we don't expect that to happen. If your expectation is, I'm going to wait for the rates to go down, okay, let's talk about the cost of waiting, right? What's the difference between you maybe buying now, refinancing later, versus buying later? So we need to look at what the alternatives are. So that's one conversation that we have with clients.
Mm-hmm.
And then the second conversation is just, it's real planning and talking about the options that somebody has. So we talk about things like the seller buy down, for example. Like, okay, you want to have a 5% rate. There's a way you can have a 5% rate, and it's not expensive. You just need to, look at the numbers. Instead of trying to put an offer that's $20,000 on their asking price, just give the same offer that's $20,000 on their asking price,
Mm-hmm.
because we can cut the rate by 2-3%, and you're gonna get to the rate you want. So then it's more of a tactical conversation with things like the buy down, with things like, hey, let's get you in that rate today and refinance that house in 8 months or in a year, and we'll give you a free refinance, because we can do that. We can give a free refinance as soon as the rates go down,
Oh,
and
wow.
let's talk about what those numbers look like.
Mm-hmm.
Or let's say, sure, you're going to have a higher rate, but you've been in your house for the last 2 out of the last 5 years. So if you sell that house, you can make up to, if you're married, $500,000 in tax-free money, which then you can put some in the new house, some in the market, and the gain for that is going to be better. So to me, it's first an invitation to really think about what the blockage is,
Mm-hmm.
and then second, really have a conversation that's more
Mm-hmm.
tactical about what's the planning that's necessary for this to make sense. Selling and making $500,000 tax free makes a lot of sense to me.
Mm-hmm.
Doing a buy down where, sure, I'm maybe mortgaging an extra 20,000, but my payment goes down by $1,000 a month, makes sense to me. Getting a free refinance in 8 months makes sense to me. There's a lot of ways that this can be extremely attractive from a mortgage and financial perspective, but people need to be invited to the conversation.
Mm-hmm.
And look,
Absolutely.
if you're a realtor, and in all honesty, if you're a realtor, you're listening to this and you go like, look, I'm not a lender, that's okay. Bring it to us. We're with Premier Plus, and obviously we do this with every agent, but especially the Premier Plus agents, you have us right there. Like, bring the client bring us to the conversation before you convince the client that they should buy. Let's have that conversation. Let us show them the numbers, because we have all the charts and the mortgage. We are so ready to have that conversation with clients. You have no idea. We are dying to have that conversation with clients with all the numbers, the charts, the colors, everything. So
The
just send
colors,
it
the
to us.
pictures. Yeah. Oh, well, one thing as you were talking about that we've been discussing is if buyers are waiting for rates to go down rather than jumping in the market right now, what is going to happen when rates go down? You're going to have way more competition. I think we'll see way more multiple offer situations because now you're going to have sellers. Sure, we might have an influx in inventory for sellers who are rate locked, who say, okay, now I'm ready. We might have more inventory, but we're going to have way more buyers who are just waiting for that number. And you're going to have way more competition during that time. So if realtors are educating their buyers on these different strategies, the buy downs, and really looking at their financial situation holistically, I think it's in their best interest to have that in-depth conversation now, because whatever's going on geopolitically and in the macroeconomic space and all of those, mainstream media headline news, clickbait scare tactics that your buyers are consuming every day. I mean, you're in a battle for the truth, and you're in a battle for good knowledge. And the way that you can combat that is being up on your current local market and making sure that you have the right person to talk to make sure that they can take that personal data from the customer and showing them that there is a way. And if this is what they want, and ensuring that this is a good financial decision for them, ensuring that you would be doing them an unethical disservice by not introducing them to the knowledge that they need. Don't take a phone call and say, oh yeah, you're waiting for interest rates to go down, I'll call you back then. You need to handle that objection by saying, before you make that decision and before you close the door, let's just have a conversation with my friend, and who's going to show you all the pictures and all the graphs and take in your personal information so that we can make sure that if you say no, that it's an educated decision.
Well, look, when somebody says a couple of things, right? Like, one, you're right. We need to be advisors. We all call ourselves advisors, and we have not given advice for years. We just take orders. And for the first time, the market has told us, hey, people are going to come to you with questions, and people are come to you with fears, and people are come to you not ready for you to open a bunch of doors, not ready for you to lock the rate and close fast, right? Like, there's a shift between 2 years ago us and 2 years and now us, which is the questions and peeling that onion. Like, hey, one thing that we get, because we get the numbers, right? And we have to be on top of this. Foreclosures are up. Foreclosures are up significantly, and they've been up for the past 3 years. Yes, that's true, but they're also 60% of what they were pre-pandemic, and during the pandemic, it was illegal to foreclose on somebody. So yes, they're up 3 years, but this is an actually historically low number, because now foreclosures are not illegal and they're still historically low. So this is a great number, actually. So we need to be able to peel those layers and obviously have the knowledge to do it, or at least the resources to do it. But the second thing is, like you're saying, somebody calls you. If somebody's talking to an agent, to a lender, to a title company, to whatever, they want to buy a house. And more importantly, if they're deciding not to buy a house, and they can, is because they're more afraid about making a mistake than they are excited about buying the house. What we need to do is we need to shift the conversation to, hey, waiting might be the mistake that you're afraid of making. Like, the whole point of, I don't want to buy a house because I don't want to be house poor and I don't want to be in a bad situation. That's true for a lot of people. But also, waiting might put you in a bad situation. And trying to buy a house in 2 years when the rates are down, or in a year when the rates are down and everybody has the capacity to put a higher offer, and sellers are not pressured to have to give concessions, and all this magic dust that we have in mortgages where I can disappear the 8% and give you a 4% and do all these weird things, you're not going to be able to do it if the seller is not in line to do it. So I'm afraid, and I genuinely say this because when I talk to my clients that are approved and they're not buying a house, I feel like I fail them, because I'm making them a disservice, because I know that if they don't buy today, this market is gonna step away from them. it happened to me in my life, right? Where I felt like every single year that went by, I was comfortable paying for this, but the house I wanted was this. And then the next year I could pay for this, and the house I wanted was this. And eventually that house went away from my realistic future. Now, that's okay. Nobody's sad for me. I just wanted an extra bedroom. No big deal, right? But if you're in a position where you're renting, if
Right.
you're in a position where your family is actually outgrowing, if you're in a position where you actually need that move, I'm afraid that if you don't jump into that train of appreciation and a train of home ownership now, you are going to be faced with a really tough position
Mm,
because that might not be available in your future.
yeah.
I have a teammate, Anthony, in my team, he's not very eloquent with his words and he's just very blunt, but he tells clients like, hey, if you want to buy a house, you need to buy a house now and you need to ask for a $15,000 salary concession. And if you don't do that, you're never going to buy a house. Or you're going to have to move to a place where you really don't want to move and drive an hour and a half to work.
Yeah.
And clients don't know what to do with that. But again, I like to word it differently, but he's 100% right. It's, look, if you don't do it today, today is going to be more affordable than tomorrow, even with lower rates.
Hmm.
And people need to hear that and need to see that. And if it works, great. If it doesn't, fine. But it's our responsibility to show them that, because what I don't want is that same client to call me next year and for them not to be able to qualify anywhere in the area they want, and now they have to move out an hour and a half and they're just in a bad position, and for me to go, that's my fault. I should have showed them what I didn't show them. I just said what you said. I just said, okay, I'll call you when the rates are low.
Yeah.
It just doesn't work.
Yeah. And particularly in Southwest Florida, nationwide, we're projected to have a 5% increase in home prices. We are not expecting a home price decrease. We're expecting somewhere between 5 and 5.5 million homes to be sold in 2024. Um, so we're looking at a good amount of transactions, and um, and home prices to be higher. So all of the data is tracking with what Ed is saying. And I think it is really important that as an agent, you can articulate that to your customer. And if you can't, then bring in Ed to explain it to them so that they can understand and see where, like I said, particularly in Southwest Florida, we're going to see home prices, I think, be higher than a 5% increase. It's on a historical increase, and I believe that that's going to be the case. Just like with what Ed said, of when rates do come down, could be quarter two, quarter three. We don't know, but when that happens, then we'll see higher priced offers on the homes. Our list price to closed price was in the 96% range, which
That's
is
right on.
really awesome. Uh, but I think we're going to see that inch closer to 100, or we're going to see price increases throughout the year. So,
Yeah, we look at things like house formations versus house completions, and there's a deficit of 500,000 homes every single year in America, and that deficit we would need to
mhm.
build more. We would have to have record number in buildings for the next 10 years for us to even get close to a normal market. And look, one thing I want to touch on is you have to put yourself in the mindset of people, right? And for so long, a realtor shows houses and a lender pulls credit and takes the application. And we're now asking people to, and we are asking you as lenders, and you're asking people as realtors to not come to you with, hey, I want to see 1 2 3 mainstream, but to come to you for a real consultation and should you buy or not. And we're asking you to bring us into that conversation because we can talk about things, right? Like we are one more tool in your toolbox. Not that I'm calling myself a tool, but one more tool in your toolbox. So use us, and we gotta really give the confidence to the clients that when you send it to us as lenders, we're not just going to pull credit and take an application. We're going to have a consultation with them, a pre-purchase consultation before we even do that. Because,
Mhm.
if they just wanted to pull credit and get an application, they would go to, Quicken Loans, and we would all lose that client. Instead, let's have that consultation first. And again, the invitation to you guys is presented like that. It's not a sales pitch. It's a consultation on this is what's happening. Does this make sense to you, to your own financial world? And sometimes the answer is no, and that's okay. I mean, not to get into products, but we have very aggressive products that, I can do a no income loan. Sometimes a client is 6 months away from being able to show the right income, and the answer to them is waiting. Sometimes there's clients that say, I have to pay so much money in taxes. If I ever show my right income, I'm never going to do it. Then they should do a no income loan. So the conversation doesn't mean we're pulling credit, get an application, and putting a stamp of decline, because that's not what we do.
Right. And I think today's buyers are a lot more educated than they were in the past, certainly. However, they don't have deep market knowledge of the products and the services, which is also our argument for why a realtor is so valuable to the process, because there's an argument out there that are we even needed? Because you can search for a home online and get the information that you need. But only a realtor who knows a particular neighborhood and the conditions of that neighborhood and that home and what their local market is doing can provide that deep insight and knowledge, which is why you are so important. Same thing with a loan officer. And I think we've had a really valuable conversation about that, where I think the lesson learned is we have a lot to be optimistic about in 2024. And I think that your customers might have a lot to be optimistic about, but let's not have that optimism be deferred and wait too long because they're waiting for something. Let's bring them into that deep dive conversation now, so that they have all of the knowledge that you can't get on the internet by filling out a form. You can really discuss their particular situation in that neighborhood, in that area, and help them feel the absolute most confidence possible when they either say no or yes to jumping in the market. And that's really what we want, right? All of our actions have to be in the consumer's best interest. It's not in the consumer's best interest to just hear their objection and say, okay, sure, all right, fine, if that's what you want to do. It is in their best interest for you to consult them and to bring in a good partner who can do the same. So I'm feeling really good about 2024. I know last year was a bit hard with the lower transactions, the buyer hesitation we experienced, and all the other things going on. And I'm looking forward to a really great year. And I think our agents are too. So we just need to communicate that with our customers, right?
Yeah, I think last year, I can speak for myself. I think last year prepared us for this year.
Yeah.
And that's the key, right? Like, do you change your presentation? Do you change the way you talk to clients? Do you change? Because if we're doing the same things that we were doing 2 years ago, we're just not going to get the same results, because it's not 2 years ago anymore. So I feel like last year was a great year of, okay, this is the new sentiment. How do I explain this? How do I do this? And if you did the work, and it's not too late to do it, this is going to be an amazing year. Because I think that for everybody that did the work last year, and then now this year, all the sentiment for houses is more positive, and all the numbers are more positive, and all the transaction counts should be higher. For the ones that actually made the change and stayed in the industry, I think this is going to be a fantastic year. I'm very optimistic too. But because of that, right? There's a quote by I don't remember who that says, you can get really, really good at almost anything in 20 hours, but most people push the first hour 20 years. Just, anything that looks hard, just, get on it. It will take 20 hours for you to become an expert almost on that. And most people don't do it.
Yeah. So let's leave our agents with some parting thoughts, Ed. If what can they take away? I mean, you've already offered so many communication talking points for them. But what can we leave them with in the
Biggest thing
outlook?
to me,
Yeah.
the biggest thing to me, whether you're listing a house, whether you're walking into a listing presentation, or whether you're talking to a buyer. And I know that, for the people that have heard me talk for the past, I don't know, 6 months, I sound like a broken record. I don't care. It's the best strategy. It's the only way I would personally buy a house right now. I wish I could use this for an investment property, but this is only good for primary residences and vacation homes, but not for investment properties. It's the buy down strategy. Understand what the buy down strategy is. The buy down strategy, it's a back to the future car type thing where you can get into a 5% rate in today's market with a minimum seller concession. If I'm a buyer right now, and if I negotiate a $10,000 decrease in price, I'm gonna save $60 a month. If
Mhm.
I negotiate a $10,000 seller concession and apply it towards the rate, I can save upwards of $250, $300 a month. It's a big difference. And then on the flip side, if you think about it, if you're listing a house, if you're a seller, we all focus on, I'm listing a house for $600,000. So I want to market that house so well that everybody that can afford $600 and up will look at my house. But you are starting with a pond that's only the people that can qualify for $600,000 and more. But what if you can turn that $600,000 property and increase it $15,000, so $615,000? At that point, I promise you, the price doesn't matter. You increase it to $615,000 and give $15,000 in concession, and you show that that house has the same payment as a $520,000 house. You, with the same marketing materials, with the same everything, you now just increase the pond, because now everybody that can qualify for 520 and up will have the opportunity to look at that house, not just the people that qualify for 600 and up. And guess what? The people that can qualify for 520 and can buy your $600,000 house, that's probably the best house they can ever afford, because it's actually a $600,000 home. So look at the stats. The stat says, Jillian just said, houses are going for 4% under the actual asking price. So just offer that much. Maybe not 4%, but offer 2% in
Right.
seller concessions. I promise you, your house will be just financially attractive for everybody. And the fact that we're in a market where that can make that big of a difference, where I can tell my $500,000 client, hey, I'm going to get you in a $600,000 home for the price of $500,000, is bonkers to me. Everybody should be talking to that about their who goes to that on a listing presentation? Nobody.
Yeah.
Everybody's talking about the same thing. If you show your seller, hey, this is how I'm going to market the house to all the people that are trying to get financed and that can't qualify for this house, because that's going to increase the amount of people that can buy it, that at the very least,
Hmm.
it's something different, that they're going to go, okay, this guy thinks outside the box, this girl thinks outside the box. I've never heard of that. They taught me something. That's better than just saying, I got great listing marketing and look at this flyer and like the paper is thick, so it's obviously nice. Like, just,
Right.
we got to change our
Let's look at
strategy.
strategies.
So that's
Right.
that's my takeaway. My takeaway is do that. We have, again, we're dying. We're just put me in, coach. I have all the flyers, all the things, the emails, that the email saying it's talking about the tax deduction of doing that and why that makes sense for both buyers. And so we have everything. Just reach out to us, because we have the materials made for you. You just need to give us the address and we'll do it all for you.
That was going to be my follow-up question, because you are talking about this strategy. Obviously you talk about it all the time because you're so familiar with how this can work and all of that. So for our agents who need to learn how to communicate that with, at a listing presentation, so you're saying you have the flyers, you have all the things that they need.
We have agents at Premier Plus that they go to listing presentations, present that, give like a very, very, very light cliff note of it, and then just zoom us in.
Yeah. Okay.
And we help them in the listing presentation. And guess what we're telling the sellers is, I have, just me, not just my team, but me, I have 33 approved buyers dying to buy a house. Let me market this strategy to my approved buyers, and then Scott's approved buyers, and my whole team's approved buyers, and everybody else at Neo in their country of approved buyers that want to move to Florida. I mean, it's just, it really becomes a no-brainer. It's a secret weapon that, spoiler alert, everybody can use, but nobody is.
Right.
So
Well, thank you for that.
you just need to phone us in, give
We'll
us the
just,
address. We'll give you the marketing, the everything. We'll talk to the
yeah,
agent, to that seller. We'll do everything.
we'll set up a Zoom call, all of that. Yeah.
That's it. We have a
Well,
link where
that
you
is
can
an
set up the
incredible
Zoom call.
strategy. What's that?
We have a link where you can set up the Zoom call, and everybody in the team is so ready for that. Because think about it, from a selfish standpoint, that makes me look like a hero to my buyers. Because I
Mm-hmm.
want to tell my buyers, hey, guess what? I know you only qualify for this. I got you this house for this price. I look amazing too. It's great.
So if realtors want to learn more, where do they go?
Well, if realtors want to learn more, there's a couple of options. The easiest one is just, we have the number on the screen. That's my cell. That's 239-244-5871. Just text me PPR and we'll send you the links. We'll send you everything. Just text PPR and that's it. You don't even need to say hi. Just text PPR to that number and we'll take care of everything else.
Yeah. Yeah, and for PPR agents, all of their information is on your intranet. You can go into shared docs and search Neo, or go in the promote tab and find all of their information. But they have a special bat line, like an emergency call line, just for Premier Plus Realty agents to help you in those situations where you need an answer right now. And I really appreciate that about the service that they provide. So this has been such an awesome conversation, Ed. I really have appreciated the way that that you've given practical tips and strategies and things for agents to chew on. I think that everybody watching has some inspiration and motivation to go out and learn how to present this listing strategy, and has hope and optimism for the year ahead. So thank you. I really appreciate it.
Well, thank you, Jill. And look, the agents out there, this is an exciting time. We're selling the best product in the best place in the world to sell it. And you
Mm-hmm.
guys have a great brokerage that gives you nothing but tools for you to succeed. So just get on it.
That's right. And we'll end with that.
All right.
So,
Do it.
all right. Well, have a great day, and we'll see you next time.